Do you start to see a repricing of some of these equities around the possibility of the likes of Germany and Italy being cut off?
Yeah, I mean, we've seen obviously the broader consumer cyclical space, so core cyclicals, industrials, auto stocks have been sold meaningfully, and I've seen meaningful downside in the last couple of weeks. So it seems to me that the market is somewhat preparing itself for a fairly tricky outlook and somewhat the worst case scenario. So some of the data that we track on positioning, on sentiment are pretty much record low and imply a lot of negativity already in the price. Now, of course, if you were to see some of this worsening on the conflict front, and indeed, much tighter supply from gas and energy, we can have much more downside to the market. I think a kind of a mild recession might be in the price now, but if you have something much more severe, you can see the market falling more and maybe more unwind of this or more selling of cyclicals to some extent.
Emmanuel, is there anything that you'd be buying right now, given what we've just talked about, all of the geopolitics, all the earnings pressure, and possible energy rationing?
We still like energy, simply because this is something which ticks many boxes in terms of giving us a hedge against this very complex geopolitical situation. I think the oil concerns are not going to go away anytime soon. I still believe inflation narrative is here to stay as well, and the sector is giving us a mix of relatively good fundamentals, strong earnings on the side, cheap valuation, good balance sheet as well. So we very much like energy. We're a bit more nervous about materials given China exposure. We like some of the industrials. We've seen some of the short cycle names delivering good numbers. We think the big picture is very much about investment. We need to have more capex in many parts of the economy, and that's going to be helping some of the stocks here in the space. We also like some of the stocks in utilities, which are a bit more defensive. So at this stage, I think you want to have a bit more of a barbell allocation, but some of the cyclicals look too cheap, have priced what seems to be too aggressive or too negative macro outlook.